Hello, and welcome to your Day 190 Health Check. To really understand what's happening with any one asset today, we have to pull back and look at the big picture. And right now, that picture is a sea of red. The most important number on the board today is 11. That is the reading on the Crypto Fear and Greed Index. And folks, that signals near maximum market panic. So everything we discuss has to be viewed through that lens. And this panic, it's hitting absolutely everything. Ethereum is down more than 3%. Bitcoin has dropped over 2%. And when these giants start to bleed, it really kicks up a storm for everyone else. So let's see how our asset of interest is weathering that storm. Okay, now let's zoom in from that macro storm and see exactly how the PLAZM protocol is holding up today. So PLAZM is down nearly 10% today, and each share has fallen over 6%. You can see both are feeling the heat a bit more than something like Ethereum. So the natural question becomes, is this something internal? Is something broken? Well, the on-chain data gives us a very clear answer here. No, there are no token unlocks scheduled for the next 80 days. This isn't coming from inside the house. What we're seeing is simply macro fear hitting a smaller cap asset, which frankly is exactly what you'd expect to see on a day like this. So if that big price drop is just market noise, where do we find the real signal? To look under the hood at the protocol's mechanics, let's bring in our analyst, Chloe. Thanks, Marcus. You're absolutely right. The signal today isn't on the price charts. It's buried in the core mechanics of the protocol. So let's start with the bond market, which is really the engine room. And here is the very first sign of strength. We saw 134 new bonds purchased today. Even with all that extreme fear swirling around, fresh capital was actively flowing into the system. And this right here, this is the system working perfectly. As the price of ETH dropped, the bond APR automatically jumped to over 34%. Now, why does it do that? It's because the stablecoin yield becomes that much more valuable in comparison. It creates this powerful built-in incentive to buy bonds exactly when the market is down. Now, let's look at the vault. It's holding over 200 ETH, which is worth almost $418,000 at today's prices. Of course, that dollar value is going to fluctuate with the market, but the key takeaway is that the underlying treasury is solid, and that provides a really strong foundation for the protocol. Okay, next up, let's talk about how this protocol actually generates its own yield and how it supports its own token price. This is what I like to call the protocol's steady heartbeat. It's the yield engine, and it's completely unaffected by market fear. Today, it generated another $396. Just a consistent, reliable flow of real yield that powers this whole system. And that yield gets put right to work. Over its lifetime, the protocol has already spent over $74,000 to buy and permanently burn its own tokens, and another $28,000 to strengthen its liquidity. This is a system that is constantly and automatically reinvesting in its own health. And this isn't just history. It's happening right now. There's nearly $1,600 in those reserve pools ready to be deployed. The fact that this number is a little lower than yesterday is actually proof that the system is doing its job. It's actively buying this dip. All right, for my last section, let's look at the overall token supply and, most importantly, how stakers got rewarded today. The supply dynamics here are a huge source of strength. 18% of the total supply is already burned. It's gone forever. And that number is always growing. When you add in what's staked in liquidity pools, you realize nearly half the supply is locked up. The long-term trend is just a continuous squeeze on the available tokens. And finally, the most important function for anyone staking, the daily payout. Over 90,000 PLAZM was distributed right on schedule. It proves the core reward system is humming along just fine, completely insulated from the market chaos. Back to you for the verdict, Marcus. Excellent analysis, Chloe. Okay, let's put all of that together and deliver the final verdict for day 190. So, this scorecard really tells the whole story. The negative price action? That was clearly driven by market-wide fear. But internally, the protocol showed incredible strength. We saw a healthy inflow of bond purchases, the yield engine functioned exactly as designed, and there was zero internal selling pressure. So the bottom line is this. Day 190 was a live stress test. You couldn't have thrown a more extreme market condition at this thing. And what the on-chain data shows is that the protocol didn't just survive it, its core mechanics performed flawlessly. And just a reminder for everyone watching, the content in this explainer is for informational and educational purposes only. It does not constitute financial advice. Decentralized finance protocols carry significant risk, and you should always do your own research and consult with a qualified professional.